Hey there, it's Trisha, and I'm going to go over the trades for Tuesday, March 17th. And I use two setups off of three charts with indicators for confirmation as a conservative approach to trading the S&P Emini. And you can check that out at www.easyeMinitrade.com. There wasn't a whole lot of price action going on, for our setups in the morning. You can see that price is just kind of going back and forth around the close and the low from the previous day and around our moving average. So realistically, in my opinion, until we get a break one way or the other, there just isn't really anything to do. You can see our trend indicator, all morning was just going down, down, down. This is the 18 mark and this is a 20. I just have an alert usually set at the 18 mark just so I perk up a little bit as we're crossing above that, getting towards 20. But anyway, you can see that we really didn't, have our trend indicator going over 20, until much later in the day. So this is about where we get the break at about 12:20 thereabouts. And this actually, make this a little smaller so you can see here. This actually was around 12:20. This setup occurring. Actually almost 12:21. I was not trading during lunch, so I did not see this. Now, I'm going to point a couple things out why this would not have been the best trade, even though hindsight you can see that it would have worked out. We don't have divergence. That's okay. Our indicator has not, at the point where we're getting our first blue dot, has not crossed into oversold yet. But when we do get our first green momentum histogram showing up, we have already crossed into oversold. So realistically, that would be something that I would pass on. I will take something when it's already in oversold if it's coming from divergence, but we do not have divergence on that. This is the bar that it's setting up on here, and that's great. It's above both moving averages. The previous close was above both moving averages. Now on this bar here, our tick, actually we do have an extreme, and I believe it's not 1,000, but it was close to 1,000. In most cases, what you'd like to do too is you might want to change your tick chart to a 1-minute chart, if you like, just so you can see the tick each minute instead of every 2 minutes. Totally up to you how you're comfortable with that. But right at the point of this setting up, we were extreme and then it dropped on the tick. So you could have taken this, but usually what I like to do is I like to wait for a pullback and then another entry, because most times you are going to get a pullback when you do get extreme readings of almost 1,000. In this case here, you really did not, but that is not the norm. Usually you do get a pullback. So if you did take this trade, you would have got in at about 750, 750, and you would have got your +2, +4, and then you would have trail stopped out using the low of this area here, a quarter below that area, and you would have trail stopped out at 762.50. So if you did take the trade, it would have worked out. But I can honestly say that if I was here during lunch, I would not have taken that trade. Just because of my plan. But if it fits your plan, then you absolutely can take that trade. This is a trade that is that I did take at 116, and you can see we have price going sideways, indicator going higher as the price is going sideways. So I'm in at 763.75. We are above 20, so we're okay there. What I want to show is that this is nice because we do have divergence and we haven't crossed into overbought yet. So I like that a lot. Now this is the bar that we're setting up on, so we're okay there. Now what I did want to point out is that, so I'm in this trade at 763.75 and I'm watching the price action here, and you can see that we're going higher here in price, all while our indicator is not. Our indicator is actually going sideways. So that to me is a caution. We're going, basically we're going higher, 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 but our indicator is failing to make higher highs. So for me, that is a caution flag. And so when I saw the histogram here decreasing in momentum, and that conjoined with this and this here, I hit a market order and I'm out at +2 on my whole lot. So I just wanted to point that out because you can, if you saw something like this, you could opt to get out. And obviously, you know, after the fact, you can see that, yeah, it was the right choice to get out. At that point, we're not looking for shorts yet because we're still in an uptrend, but that is why I chose to exit that. And you can see my trend line here. It's going sideways, going higher. So, you know, that's why I opted to get out. The next setup that occurred was at 1438.46, and that was a long setting up, and I've got it in red here because I did not take it. This is the bar here, and then also right here. Let me use my pointer. Right here, and this bar here on our longer tick chart had not closed yet, so I would opt to pass on that. Also, our MACD on our longer tick chart is not in alignment to take that trade long yet, so that would be another reason why I would pass. Again, that would be something that you would have to decide for yourself, but at the point that this trade set up on this bar was not even nearly closed yet. We were still yeah, it was fairly new bar, so we did not know if that was going to close above or below, so I pass. But you do have divergence on your indicator. You actually have price going down, indicator going higher, so you know you could have taken that, but I choose not to for the reasons stated here. This bar is not closed yet and it's not almost finished, and my MACD is not in alignment, so I'm going to pass on that. Actually, our trend indicator is okay. So again, just wanted to point out why I would not take that trade. This is a trade that I did take. This was at 3:05 Eastern, 3:05.34, and long setting up. We get our first blue dot. I actually wait until I see a green, which is under this bar here. I hit enter. At a market order, got in at 765.75. We have not crossed into overbought yet, so I'm comfortable taking that even though we don't have divergence on our indicator. This is the bar that it's setting up on, and you just need to know what up above you is the high from the previous day. So in most cases, you're going to get a stall around that area. So there's about 6 points, 6+ points in between where I get in and where that is, so I'm okay taking that. I actually got my +2 and then trail stopped out over here at +1.5 on my remaining lot, so that, you know, that worked out for a small gain. So this is a trade that was setting up at 3:40, and as you know, I don't trade after 3:30, but I did want to just point this out. You have price going sideways, you know, basically goes up, pulls back to the same support area, all while the indicator is moving higher. We had the pullback here on the indicator, but it did not come back down to the previous lows. So that is divergence. This is the bar that's setting up on our longer tick chart, and the problem here is that from the point that you would get in here where we're setting up to the high from the previous day is only about 3 or a little more than 3 points away, so that would not be enough for me to take that trade. Also, obviously, you know, the time of day, I won't take anything after 3:30, just because you really don't know what's going to happen. Things, you know, can get pretty whippy, and you know, I just choose to sit on my hands at that time of the day. So anyway, those are the trades that set up for Tuesday, March 17th, and I hope that you seeing the trades that I did not take and why I don't take them also helps you as much as seeing the trades that we're taking. Okay, have a great night.